Hello, and welcome to another update video about Bitcoin. What a day yesterday, what a day. I think it might continue a little bit more, obviously going a little higher before we see a more substantial top in place. That's at least what the microstructure suggests, which I have added to the smallest time frames earlier today. But overall, the situation hasn't changed at all on the Bitcoin chart to yesterday. We are still in the same structure and the same bullish structure. The idea is still that a fourth wave completed here, around the 23rd of January, and that we're now in this fifth wave. And as long as certain support levels are holding, which I'm going to talk about on the 1 hour time frame, the door to 55,000 plus remains open. At the moment, it seems that we are still moving in the third wave in this white wave count, in the white scenario, and that another 4-5 pattern is likely. 4-5 in circle wave 5 and so on, The idea is then, at some point we should get another wave 4 and another wave 5. But overall, we are still in a potential breakout structure. The market has pushed above the January high. Yesterday, Bitcoin has formed a new 2024 high and is consolidating at a pretty high level. So all of that is at the moment bullish. Of course, it could also be something different. It could be a high B wave. And a few people have asked me, when can we rule out a high B wave? You can't. You can only really do that once a 5-wave move has been established. Because with a 5-wave move up, we get a new support area. And with a 5-wave move up, it can't be a B wave because B waves have to be 3-wave structures. So to really rule out the risk that this year, this move up from the 23rd of January is a high B wave, we need to see the white wave count complete another 4-5 pattern on the daily time frame. On the daily time frame. That means only then I can rule it out, which means until then we just simply have to watch the support level to be able to focus on higher. And if a support level breaks, which again I'm going to talk about in the 1 hour time frame, that would indicate that the B wave is playing out, or that the B wave has topped. Until then, because we're holding above the support area, I am going to focus on higher prices. So someone suggested I should not even talk about the risk of a high B wave. Well, that wouldn't be very responsible, because it's worth knowing about the primary scenario, which is the white one, and about the alternative, which is the orange one, which would include a break of support, but obviously it's only useful to know about it once we get a break of support. It's for risk management purposes, okay? So you never want to hide any bearish scenarios. You need to know these for risk management purposes. And to be fair, they are part of the same scenario overall anyway. The idea is that this here is a wave 4. Either it's finished, that's currently the primary scenario, but we keep an open mind. Could easily be that the wave 4 is still unfolding in a larger ABC flat structure in which the A wave bottomed on the 23rd of January. This is a B wave because it's only in 3 waves. They can overshoot, absolutely. And if we then break micro support, we could see that C wave to the downside, and it could complete the correction here. This is something people need to know about. I cannot obviously hide it, wouldn't be very responsible. And it's also a likely scenario. It's just not preferred as long as we're holding support. So that's sort of the base case here with the wave 4 scenario, okay? And then we dive into the smaller time frame, and there we try to answer the question, which wave count is currently in control? Is it the white one or the orange one? Only below 35,000, and we're far away from that on the daily time frame. I have to change my scenario, my perspective, because only below 35,000, this cannot be a wave 4 anymore. It would have to be a deeper correction, a B wave. But we're not even close to 35K. We didn't even get close here in January. So it has remained the alternative, and it is the alternative. Doesn't mean it's unlikely. It just means that at the moment there's no point focusing on it as long as we're holding above support. On the daily time frame, the only reasonable support I can give you is the yellow box. That will change once we get the next 5-wave pattern to the upside, because only through the 5-wave pattern we can step out of the current range. Until then, and as long as we only have 3 waves, we stay in the current range. And why that mindset is so useful is proven by the Ethereum chart, which most recently formed only, this is the wrong chart, but anyway, it was only here a 3-wave rally on the ETH chart. Only a 3-wave rally, and we never escaped the range. That's why it broke down again. Only with a 5-wave move we can escape the current range. So now let's take a look at the 1 hour time frame. Here you see the two scenarios that I just mentioned about, but also here on the 1 hour time frame, we can add a micro support area. And I've also added the micro count for the current last rally that started yesterday. So the idea is, again, here in the orange count, that we're dealing with an ABC structure. A wave, B wave, C wave, short-term bearish. Even in the short-term bearish scenario, it is possible that we get another 4-5 pattern. Not needed, but possible. That means the wave count is technically not yet full, which means another high, like this, 1, 2, 3. So another 4-5 pattern seems likely even in a bearish scenario, all right? So there's no need to focus on the downside at the moment, while we're of course cautious, but you know, there's no confirmed top in place. And even in the bearish case, another 4-5 pattern seems to be needed. So we naturally just focus on higher prices against support. And in the white count, which is the primary count until support levels break, another 4-5 pattern, so basically 2 4-5 patterns, should take us to 55k plus. Okay, maybe even a little, well, that's why I say plus, could go a little higher. Obviously diving into the micro, you can see it here. This is what I've added. I've added really, you could say, nano count for that last bit here. You know the count already, but I've added this, highlighting that this here might have been a small wave 1, this rally into Sunday, then a wave 2 to the downside, which might have bottomed yesterday, a small third wave that might be finished. We might now be in a small wave 4 correction consolidation that could nearly be over. And at the moment, looking at the microstructure, actually one more high seems reasonable. Then we could get this wave 4 and then a wave 5. At the moment, the micro support area is between 46,106 and 47,064. Against that level, I'm still watching for at least one more high in wave 5 here, this one. Probably after another high on the microstructure occurred. And I will have to adjust the micro support range if we form another high here, because this is always measured against the latest high. Okay, can you see that? So this will go up with a price like a trailing stop. Initial indication that a top is in place would be a break below yesterday's low. That would be the initial indication that a local top is in place, and then it's likely circle wave 4. And only if we break below this support area for circle wave 4, I have to assume that the B wave topped. Someone suggested in the comments that a break below the halving, or no, a correction before the halving of around 30% is very likely. What I think about it? Well, I said we recently had one. Yeah, okay, maybe not 30%, but 25%, which was this one. We've just come from a correction. Maybe we're still in a correction, but all of that would still be part of the same scenario. Yeah. Because even from here, if we dive back, or if we come back into the yellow support zone, I mean, it could technically be a 30% correction without invalidating the scenario on the daily time frame. Yeah, but it's nothing I'm primarily watching for. We've just had a correction of, I think it was, what was it, 25% or 20% at least? Yeah, I mean 22%. I mean, that's not even 30% is not a large correction for crypto. They can happen like, you know, every other week. You know, that's not unusual. So yeah, of course a correction could happen before the halving. My question was what is it based on? Because we've just had a correction, and you know, people I don't know, there's this narrative that people say always before the halving there was a deep pullback. I mean, I only see one in 2020. Yeah, I mean, I don't know. I've looked at the charts. I mean, I know the charts that there hasn't really been a deep pullback before other halvings. I mean, yeah, normal corrections, they always happen. We just had one, but anyway. But again, the halving it's not really anything to build a TA on, right? I mean, the halving, how many halving cycles did we have, right? And not enough to have a strategy that's based on statistics and proper, you know, enough data points. Should be clear. We only had, like, you know, just a few, not even a handful of halvings, so that doesn't give you enough to come up with forecasts, really. Okay, so I can only urge, I know it's good in your crypto Twitter talk about it because they get clicks and everything, but really from a trading point of view or strategy or anything, even though of course we could get a deeper pullback, I mean it's covered by the Elliott Wave scenarios here, just looking at the halving cycles alone, we don't have enough to come up with a strategy. Okay, so yeah, but I think that gives you a good idea of the parameters to watch for today. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.